Hey traders, John Howell here. So today's video, I want to give you a bit of a guidance on what I see coming over the next 5 years. I believe there's going to be another big bull move over the course of the next 6 months. I believe also coming into 2026, we're going to have a nice, good correction. Not a deep correction, not a big, massive 50% correction, but I believe that's going to be the reset again, and I call it a reset again for a repeat of what we saw back in the 2000s. And you can see this from this screenshot here. We can see what actually happened back here with the whole, this was obviously the tech bubble here. I'm looking at the Dow Jones here, but that was the tech boom there. I believe we're going to go see something like that again. And I'm going to explain the reasons why I see that and what I see coming over the next 5 years. And the reason why I'm doing this video is because a lot of traders these days, they're just focusing on the intraday charts, right? You're focusing on 2 and 5 minute charts and that sort of stuff. And we do know that the really big money, we're talking millions and millions and millions of dollars, right? Not small little profits and so on and so forth. But the really big money is what? Getting in on some really significant trades that's likely to make a big move over the course of, when it comes to my personal trading, I like to get in the trades that might likely to last a few months, right? But this whole thing here is that if we want to make some really big profits, getting into something and hold it for a few years and jumping on something really substantial, you know what I mean? That's how you end up making really big profits. So I really want to walk you through what I'm seeing right now and what's happening right now and why I believe this. So the first thing that I want to cover here with you is obviously this Dow Jones chart we're looking at right now. And there's a repetitive cycle that's actually happening here. We're looking at the monthly charts of the Dow Jones. And if I show you the scaling of this here, you can see it's on logarithmic. And so you can see the logarithmic chart through here. Here's what I have noticed and what I've found by looking at any chart out there, whether it's a logarithmic chart or it's a what's that word? What's that word, guys? This one here, arithmetic, that guy, right? Is that the right one? One thing I've noticed is doesn't matter what chart we're looking at, right? Is that if we've noticed on that particular chart, there's repetitive patterns and repetitive cycles, well, we can continue going with that, right? Whether we're looking at log or arithmetic. The number one thing that I'm always trying to do is what? The number one thing I'm trying to always do is I'm always trying to see what is there repetitive patterns, repetitive cycles that we're not seeing right now. And one thing I've learned from Ray Dalio is a lot of traders, they focus so much on the short term, right? So and this is for you guys that understand this concept. You guys are going to be positioned here for quite a substantial move. And what I mean by that is I believe we're getting ready for an extraordinary quality move for the next. Obviously, it's not going to be straight up, right? We're going to have our big corrections, our 20% corrections, and so on and so forth along the way. You know, just like back here. If I go back to the actual, this is obviously the Nasdaq through here. So we're going to see that through there, but I believe this next 5 years is going to be, next 4 or 5 years is going to be incredible because we're still in a very big bull market from here. Okay, overall big bull market. And one of the things that I've learned from Ray Dalio, and this is something that for you guys that are long-term investors as well too, a lot of traders focus a lot of the time we're focused on the now, right? Like, oh my goodness, Trump's coming in, and therefore the market's going to crash. Oh my goodness, it's COVID. Now, if I take everything off the screen here, all my little pretty lines through there, and now if I just let me do this here. Yeah, actually, no, I'll keep them on there. That way, I can sort of show you this here, right? So one of the biggest mistakes that I've made for so long is I've always focused on the short-term movement, right? Because I guess as a trader, we're looking for that short-term movement to make a profit. So we can, quit our job and so on and so forth. But that's the thing that stops us from making big profits, right? You try and, the thing for me was when I first started trading, I stayed up for so long trading the futures markets, trading the 4-hour, the 1 minute charts, 2 minute charts, looking for those trades every day so I can make money every day. And while that was happening, I didn't realize that instead of me sitting in front of the screen for 6 to 8 hours a day, trying to make my $200 to $400 a day or whatever it was, I could just get in the position, hold it for 3 months, make a big, massive profit without sitting in front of the screen. You see that the ironic from there. And the purpose of me saying that is so many traders are focused on the short term, and I've been there as well too, right? So one of the mistakes that I've made for so long, and it has been that. And so one thing I've really learned from Ray Dalio, especially the last few years, is there's these big, massive cycles that are at play right now. Okay. And they are at play, but the cycles take time, right? These big, massive cycles that we see right now. Like, for example, the debt bubble. We know the debt bubble has been an issue now for 10 years. It's probably going to continue being another debt bubble, probably for another 5 years or more, right? We're not there yet. And if you just study history, we do know the government's going to keep printing and printing and printing and printing and keep going until they just can't do anymore. History gives that 100% certainty. So if your thing about the debt bubble right now is that it is going to, that's it, it's going to explode, that's it, it's all game over. What happens when the government runs out of money? What's happened in the past? You go listen to Ray Dalio stuff, right? When they default and all that sort of stuff. What happens when that happens? The stock market goes for a massive boom. It goes through the roof. So if you're thinking that, then that there, right? So the reason why I'm bringing this up here for this video here is because one thing that we want to do is we want to be able to capitalize on big moves. And so while most traders are focused on the now, right? So for example, if we look at the last drop on this chart here, that's all that was through there. Right, was this drop through here, and this here was actually, I'll take everything off the screen. This here, right here, was what the whole hoo-ha was about with the tariff talk, right? Now, we can zone in on the month or the few months around that of, oh my goodness, Trump made the market crash, he's bad man, etc., etc. That's honing in on the moment, right? We're honing in right on the thing. And one thing that is important for us to do, and as you can see, the reason why I'm bringing up a monthly chart of the Dow Jones now is that if we go back in time, and if I take that off the screen and I bring this back up here, we can see just by understanding just this chart alone, and I zoom right out for the last 100 years, you'll be able to see that it's just a little blip in the screen in the context of things. And sometimes we're so focused in the moment of what this tariff talk means and what this unemployment data means right now that we completely forget the forest from the trees. And the big things we can see here, right? Every single time in the last, since Trump's been elected, the market's continued higher. Why? Because there's a massive rhythm and cycle that's been happening for the last 100 years, and that's 10 plus years sideways, 16-year bull, 10 plus years sideways, and so on and so forth. So we're still in this whole cycle through here. So if we look at that from that perspective there, and we see how that, even if I zoom in on the last 10 years on this particular chart here, this here is when Trump became elected. Now, by the way, that there was about 2 years, right? That's about 1 to 2 years. That's still the whole what's happening in the next 12 months is still focusing there, and then we go narrowing down even more, right? Like what happened recently with the tariff talk. But what is the one big common denominator you see through here? While we're so focused on the very short term, like, oh my goodness, this month the market's down 5% or 10% or that sort of stuff through there, we realize that's not going to help us, right? Because we want to be on the right side, and we want to be able to position ourselves for You know, the people who made millions of dollars out of Bitcoin, why did they do that? Because they bought and they held for many years. Bit of a clue for you guys that are trying to make a lot of money out of the markets. It's not buy and short-term trade 1,000 times a day. That's gonna get you there, is it? It's identifying these big, massive cycles to be able to position yourself, hold, and then 3 months later, or should I say 3-4 years later, that $10,000 position could be worth a lot more money in 3 years than you could ever make looking for a short-term little scalping on a 2-minute chart, which, by the way, is probably one of the worst trading styles you could ever do in history. If you're looking to make some serious money, short-term little scalping is the worst form of trading you can do. The reason why is because, once again, you want to be in the position, even from my personal trading style, where I'm looking to get in and hold it for a few months, I'm looking for a big profit, right? Short-term profits is not the way to go. A little $200 profit here, right? So on and so forth. So we can see what's happening here on the Dow Jones. And every time we've had a whole, oh, Trump's going to come in, the market's going to crash. Oh, like that's it. The tariff, this was here. This was COVID. And then the market rebound. Oh, recession talks back here. Oh, look, it's the tariff talks here. But what's happened every single time? Now, we can incorporate right now, but this time is different. But is this time really different? And without my opinion, because we don't know, I don't know, without my opinion, we can see what's going on here. And while there was so much movement in the mindset of the individual investor of like, oh my goodness, what's going on? You can see the reason why the most successful investors of all time are not worried about a 10 or 20% drop in the market. Which brings me to my next point about what I see happening over the next 5 years. I do see myself that we're in the middle of an AI boom right now. We know that, right? The artificial boom. I'm using ChatGPT now more than ever. It has been an amazing thing for me to go over contracts that I got in place, different emails that I've received from people. It helped me break it down, what I need to understand, how to respond to this. You know, even some personal things that's happening in my life. It gives me some really good context about my own personal life and my own history. Over the last couple of days, I've gone back over the last 10 years of my life and some really big moments in my life. And ChatGPT has been awesome. It's like a therapist there as well too. It's just ChatGPT. It's just been amazing, right? Amazing. So we're just getting started. Now, the reason why I say that is that we know we're in the AI boom, right? But we're in the early stages of the AI boom. And this is very similar to what actually happened back here in the 2000s. Now, when I say that, it's not going to be straight up like the 2000s. Like if we go to this chart here, right, we can see this is a logarithmic chart. If I take it off to the arithmetic chart, is that the word? Arithmetic? Right, and I go back to here for the actual NASDAQ, as we can see here, that I honestly believe that we're going to see something like this here along the way. So I do see what I do see is we're likely to get this here, corrections. Now that doesn't look like much, okay? But when we say this here, that was a 20-something% drop. This here was what? Another 15 to almost 20% drop. That was over the course of 4 months from there. That was over the course of a few months from there as well too. If I bring up the composite, the same type of thing, right? The composite actually had this one here. We have what? We have these drops. So this is another 2 to 3% drop through here. 2 to 3 month drop from there. This one here, another 2 to 3 month drop through here. This one here was a lot deeper. It had a 30% from high to low and around 3 months, but then it continued up. So the reason why I'm bringing this up to you to hear is it just happens. These cycles happen again and again and again, right? And if we can see where we are right now, this level through here. So one thing that I'm really seeing from what we're seeing here is we know we're in the early stages of AI boom, okay? And so therefore, if we go back to this chart here, if I'm just bringing up let's go back to the Dow Jones chart here as an example. I do believe that we still have another 4, maybe 5 years to go of this here. Now, what's probably going to happen is this: the market needs a bit of a flushing out of the weak hands, and then it goes for another move. So while I see that that we're probably going to finish this year off strong. In fact, on the S&P 500, I've got a 7,500 target from here. Right, I've actually got a 7,500 target on the actual S&P 500 up through here, which doesn't look like much from there, right? That's where I see things going from there. That's what I see. Now, I do see though that probably over this year, we're probably likely to see another move up, another strong move. But then maybe I do see coming into 2026, there's going to be another 3 to 6 month worth of a 20% drop in the markets. And it's just going to be another one of these. And I do believe that buying opportunity that's going to come in 2026 is going to be the foundations for the AI boom that's going to then create another one of these, right? See this here? This vertical move up from there to there. I believe it's going to create another one of those because it's the same thing, right? So I'm firstly looking at a big massive cycle of revolution, or the evolution of technology and so on and so forth. We do know the internet bubble, and then we now know the AI, what's happening right now, and then we're just getting started. We're in the early stages here. So the next greatest buying opportunity is probably going to come next year. The reason I'm saying that is that if you guys are ready for it, and you guys are ready for that opportunity, I believe millions and millions and millions of dollars will be made, right? Because if you start to buy 2026 and you buy, say, options as an example, right? I'm not saying to do this, or you could just buy the market, but there's options out there, no pun intended. So if we look at things like, you could buy things like options, right? Or you could start to do that sort of stuff, and you could buy, as you know, if the market goes through another one of these over the course of 2-3 years, and you bought options and you bought long-term options and let the market do its thing, we're talking thousands and thousands and thousands % return of that. That's where you start to make the big money from there, right? We start to make the big bulk from there. So to wrap it up, to sort of try to bring it all together for you here, I see that there's a massive sort of cycle that's happening here with the Dow Jones again and again and again. And every time we get these 20% drops in the markets, as you can see, that if we just use something as simple as the moving average, we can see how that every time we've gotten a drop here, we've continued higher because we're in that overall secular bull market. And while we get these short-term little freakouts, the market's continued higher. So that's probably what's going to continue for the next 5 years. We may get a little rally up to the upside, and then another 15-20% correction, and then another big move, and then like something like that. Now, I'm not saying we're not going to get to 120,000. We may though, but the diagram is the representation of what I see from here. And so every time we've had these scares, right? Every time we've had one of these guys, Trump, COVID, recession talks, tariff, they've all been what? Amazing buying opportunities. And so if we can not be so honed down on, oh, that's what that is, but more honed down on next time we have another 20% correction, I'm going to be ready for it. Because when we do get another 20-30% correct, if we do get that, that's probably going to be a really good buying opportunity for especially in the AI sector, because we need to see a flushing of weak hands. So I don't believe we're getting ready for a massive crash like a COVID, like a 2008 market crash from here, as you can see. I don't believe we're getting ready for that, because we're still in the market is not giving us those signs here. And if I'm just looking at something as simple as level through here, and it doesn't matter what chart you're looking at. If you're looking at a long-term chart and it gives you an indicator that gives you probability of, is the overall bull market ending? Is it starting? What's happening here? We just need to go with that. And what we can see here over the last 100 years is that when we're in these big bull markets, the moving average just stays long. Now these, yes, we get 1 to 2 years pullback, 1 to 2 year pullback, don't we? But it's not until the moving average starts to flatten out, as you can see here, that we know that the bull market, or the secular bull market, has now come to an end. Same thing through here, right? The moving average has been trending up. The secular bull market ended here. Look what's happening through here. And that now brings home why the market has just continued higher, even though we've had all these really big scares. Now we can import. That's because of the government. That's because of the low interest. We can import anything we want to. That's cool. But the fact of the matter is that the market is telling us right now from a simple chart that the moving average is still trending up, and we're still in this very big secular bull market from here. So every single time we've had these drops, the market is telling us that we are not over yet. And the market is telling us, this chart is telling us, that we are still in a very strong bull market. And every time we've had these scares, instead of you getting scared, you should be getting excited, right? Just like, by the way, that little blip there was the tariff talk. See how when you step back and you look at the market from I call it a 10,000 foot view, we start to see that. And so we can see this from here. We can see that from the Dow Jones. And so while you're maybe looking for tops in markets, which I still see some traders doing to this day, you're looking for these, like remember, if we just look at a chart from here, where has been the biggest moves, the biggest profits have been with markets, right? So with the market. So I mean, if the market is trending through here, the biggest profits is going with the market, going with the market, going with the market. And while we get these, now remember, this is where some people get really confused. Even focusing on what? The short term. Oh my goodness, look what's happening right now. 6 months, 12 months, right? Because look at this here. This here was what? This here was a 12-month process on the downside, wasn't it? It was through 2022, 2023. But if we're just focusing solely on that, and then we can even just go down to, if we actually then bring on the daily charts now instead of the monthly charts, and we zoom right in, that's what we see, right? We see, oh my goodness, the market is down, the market is crashing, the market is X, Y, Z, A, B, C, and all that sort of the numbers behind. We can do that. But the big thing is, this here was what? Was actually just, it was a starting of a big move, right? And we start to look at things like the S&P 500. Look at this here. So we had a very big move up from here, and then we had this it's a shorter in the big scheme of things, isn't it? Now, the unfortunate thing is, people that are trading of the markets, they trade the markets, they think there's this narrative around short-term trading, right? Like the narrative is, what? 1 year? Are you serious? That's the narrative, and that's where people that make big money out of the markets, they capitalize on big moves, right? And those big moves generally take time. So as you can see here, why did the market do this here for 1 year? But then we had this extraordinary bull market. Because what? Because we're going with this overall longer term big move in the markets. And instead of you just day trading or scalping, which again is the worst type of trading out there you can ever do, the reasons why is because scalping doesn't allow you to have big profits, small losses. You need to be able to be trading a style that's going to give you these big profits, small losses if you want to win at this game. Because the scalping mentality, I guarantee you, it is the hardest form of trading out there on the planet. Right? I need to be in a situation, and one of the reasons kept me more on the positive side than the negative side of these markets when it comes to my trading is this. I need to be in a situation where if I have a rough month and I start to have 2 or 3 losing trades in a row, I need to be in a situation where just one of my trades can triumph that. You know what I mean? So, and that's what we're looking at from there. So when we're looking at this level from here, once again, my whole thing through here, guys, is just to try to give you a bit of understanding of how the shorter term narrative is always going to incorporate something, right, about this. And remember, whenever the market's down, that's the narrative is going to talk about the market down. Whenever the market's up, the narrative is going to talk about the market up, right? What's been happening lately as we talk about this market? What happened to the recession fears? What happened to the war? What happened to the worry and all that sort of stuff? Right? In fact, I'm doing this video here because I'm trying to share with you that maybe some of you guys have been around the markets for a long time. That one, there's probably going to be an amazing buying opportunity coming up real soon. It's probably going to be another one of those, right? And again, when I say another one of those, it means that, look at this here. Even though we had this very big secular bull market in the 2000s, and I'm looking at the S&P now, what did we have? This one here. This here was the 1987 crash. You see how 1987 crash in the moment of the few months that this was happening here, right? On the moments and the few months that this was happening here, if we're so focused on the now and today, or even this week, or even this 1 month, we're not seeing the forest from the trees. And we need to see the forest from the trees, because why? Because that was actually what? After the crash, recession, that's it, it's all over, Big Bang Theory, all that sort of stuff. It was an amazing buying opportunity. Same thing for here. Now again, these don't look like much, right? From there to there was 1.5 years, because we're looking at a monthly chart here. So while we may go through these 6 months or so of corrections, sideways movements, uncertainty, if we're so focused on even the 12-month period, but we're not stepping back, we're completely missing some good opportunities, and we don't realize that we could be getting ready for a really big bull move. So we can see even from this level from here, right? And if I squeeze my charts up, you can see that every time the market has had one of these scares, Trump got elected, COVID, recession talks, tariffs, it's actually been good buying opportunities. Now, I haven't always thought like this, guys. It's only been the last couple of years that I've actually really started contemplating this, because I've always realized most of my millions that I have not made have come from my ignorance around the big, massive cycles and trying to focus on the short-term stuff only. Right? It's like, oh man, I'm not going to buy and hold for 12 months. I'm not going to make money right now. Like, it's that mentality. And that's always kept me in the camp it's always kept me in the camp of not doing as well as I thought, or as I believe I could. So the big moves I know that if I can get in at a good time when there's a lot of fears, and one of the reasons why I'm doing this video for you is because I'm trying to share with you also that next time we have the fear, which is going to happen, next time we have another one of those. Actually, let me bring up the Dow Jones here with that chart. This one right here. Next time we have another one of these, Trump, the COVID, the recession talks. Next time we have one of those, which by the way, it was one of those just a month ago, we know what's coming, right? So over the next 12 months or so, we're probably going to go through another big scare. And that's going to be probably a bit more of a deeper pullback. So we may go through another 20-25% correction. And then I believe that's going to be another one of these, right? So what we're probably going to likely to see out of this level from here is we're probably likely to see this market have a big rally up through to here over the next, say, rest of this year. 2026 is going to give us a really big correction, but the market's still going to be up. I want you to be ready for that. Because I believe that's going to be a really good buying opportunity. And that's when the market's going to be down 20%. That's when the same, right? Crap. See what I'm saying? The same thing that's going to happen there. And if we're ready for it, and we can understand this here, fortunes are going to be made over the next 4 years. People made so much money on the crypto market and Bitcoin because why? They bought and they held for many years, and then they capitalized on them. When the market really started to ramp up over the course of 3, 4, 5 years, that's when they turned, that's when millions of dollars were made. And so for you guys, one, don't be looking for the major tops in bear markets. Don't be looking for the major top in the markets because of the short-term narrative says so. Don't let your emotions. Two, I'm trying to show you that the psychology of the actual market operation is the opposite, which simply means a lot of the times when the market does drop a lot and there's massive fears, that's the time to go buy. Like I did a video back a month ago saying the greatest buying opportunity. All right, because we're seeing this here. Now, I believe there's going to be even a greater buying opportunity coming next year because we're likely to see that again. And that's going to be a flush out of the weekend. So I see from 2027, 28, 29, that period from there. So from late 2026 through to 27, 28, 29, even possibly 30. One, this big, massive long-term charts gives us the cycles that's what's probably likely to come into play. So we can see this through here. And so that's what's happening through there. Two, I believe we're in the middle of this AI boom. Now remember, an AI boom does come with 3 months, 6 months, 12 months of sideways corrections, fears, worries, and then the secular bull market continues, just like we've seen every single time. So don't be fearful about these markets. One. Two, when we expect in this secular bull market, we do get these freak out periods. So don't be so tied to the short-term movement, the short-term fears of these markets. That's going to sort of, eat you up emotionally inside because you're so focused on this. And I see a lot of people, even just recently of this little short-term drop here, because they let their emotions get involved in them, they were selling their positions. They were buying, they were selling and buying. It's like, there's a lot of traders and investors really worried about the short-term tariff talk recently. But really, you look at this level, this here was the tariff talk here. Was that really something to be really worried about? The market is still making higher lows, so we're in a secular bull market still. And if anything, the moving average is still going up. If we are going to start to flatten out like here and like here, then that's when the market can really start to flatten out. So be ready for this, guys. Even though I personally do, my trading style is I do look for trades that do last a week. That's good short-term trading. And then I do like a lot of my preferred trading is getting in and holding for a few months and capitalizing on big profits from there. Even though I do that type of trading, I'm still focusing on the big picture. And the reason why is because it helps me stay emotionally calm, one. But also, secondly, two, I'm looking. It could be great buying opportunities because as the market is down, say 20 or 30% in the next 12 months, right now, not from today. I believe over the next 6 months, we're likely to see a big move to the upside. But then we go through another one of these. Just remember where we are right now, and just remember that could be a great buying opportunity to then see a 40, 50% move out of the markets, right? Because if the market goes down 20% and then we start to look for a 40 or 50% move, we could be getting ready for not 60,000 Dow, probably a lot higher, right? Especially on the NASDAQ. Now, look at this here from the NASDAQ perspective, right? That's the NASDAQ, and this is the composite here. This has just been continued being low, high, low, and so on and so forth. So the NASDAQ, which is the AI sector, is probably going to be the greatest buying opportunity, but we're going to see another little freak out period. But within the big picture of things, once again, guys, that little freak out period is just what? It's just one of these. And so the reason why I'm doing this video is because I want to give you the 10,000 foot view and some concepts, ideas, and sort of thinkings around these markets, and how we should be thinking about these markets and how these drops, even for a few months, 3 to 6 months, 12-month period, we're still focusing on the real short-term picture instead of saying what's really going on, but then what could be coming next and getting ready for it. And we can see from this chart here that next time we have this freak out period, do the opposite to the short term narrative, right? Do the opposite, because as you can see, every time this has happened, it's been great buying opportunities to get involved with it, to then write it back up, and that's what was happening through there. So there we go, traders. Hope this really helps you out, traders. If you, I'm giving away a free trading course. That's that first link in the description there. If you just need some help around maybe the trading side of things, then that's going to really help you out with that there. If you'd like more sort of hand holding coaching from me every single week, then I have an Inner Circle program where you can get access to me every week, and I'm sort of coaching. I do like weekly coaching sessions in the Inner Circle program from there. So if you'd like more coaching, more hand holding, then just go to getjohnshelp.com. That's an application form there. You can fill that in, and then I'll personally speak to you real soon. Talk to you soon, guys.